What if the biggest financial mistake new immigrants make in America is not overspending, but simply not understanding how the system works? What if the very bank account meant to protect your money quietly drains it through fees and charges you never expected? Many newcomers arrive with savings and stable jobs, yet within months their money seems to shrink faster than it should. In this video, you'll learn why managing money in the US can feel expensive at first and how to protect your money, build credit, and start growing wealth instead of losing it. The reality is simple but rarely explained. The US financial system rewards experience, financial history, and knowledge of its rules. New immigrants, international students, and skilled workers usually arrive without these advantages. The system is not designed to punish newcomers, but it does charge more when you do not yet understand how it operates. Once you learn the rules, however, the same system that once felt expensive can become a powerful tool for financial growth. One of the first surprises for many newcomers is how checking accounts work in the United States. In many countries, your bank balance is straightforward. You deposit money, you spend money, and the number updates clearly. But in the US, your account may show multiple balances at the same time. There is a current balance and an available balance, and they can be very different. For someone unfamiliar with this system, this difference can feel confusing and even misleading at first. This difference exists because transactions do not always process immediately. When you use your debit card, the payment may remain pending for several days. Deposits may take time to clear. Some transactions are processed before others, even if you made them later. Because of these processing rules, your account may show money that is not fully available to spend. Understanding this timing is essential to managing your account safely. This raises an important question. What happens if you spend money that appears available but has not actually cleared? Many new customers discover the answer only after facing unexpected charges. The answer is overdraft fees. These fees are one of the most common banking costs that surprise newcomers. When your account balance falls below zero, banks may charge a penalty. In 2026, typical overdraft fees at many large banks still range between $25 and $35 per transaction, although some banks have introduced lower fees or grace periods. Even so, these charges continue to generate billions of dollars across the US banking industry every year. This shows how common these mistakes are among customers. Imagine this situation. You make a purchase, pay a bill, and buy groceries on the same day. You believe your deposit has cleared, but it has not. 3 small transactions suddenly trigger 3 separate fees. Nearly $100 disappears from your account in a single day. The surprising part is that this often happens not because someone lacks money, but because they misunderstand transaction timing. A simple misunderstanding can quickly become an expensive lesson. But here's the key insight. Once you understand how available balance works, most overdraft fees become avoidable. Customers who monitor their accounts carefully, keep a small buffer in their balance, and use bank alerts rarely face these penalties. The system does not become simpler, but your awareness changes your outcome. Knowledge immediately reduces cost. Over time, this awareness helps you stay in full control of your finances. Another major expense for immigrant households comes from international money transfers. Many newcomers regularly send money abroad to support family members, pay expenses, or maintain financial commitments in their home country. These transfers are essential, but they often cost more than people expect. The total cost is not always clearly explained to the sender. The advertised transfer fee is only part of the cost. Financial institutions also earn money through exchange rate margins. They offer a currency conversion rate slightly different from the real market rate, and the difference becomes hidden profit. Because this cost is not always visible, customers may believe they are paying less than they actually are. This hidden markup increases the total amount you lose with every transfer. According to international financial data, the global average cost of sending money across borders remains around 6% of the amount transferred. That means sending $500 may cost about $30 in total fees and exchange charges. At first, $30 may not seem significant, but consider sending money every month. Over a year, that becomes hundreds of dollars. Over several years, it becomes thousands. This leads to another important realization. Small financial decisions repeated regularly create large long-term consequences. Customers who compare transfer providers, review exchange rates, and understand total costs often save significant amounts. Once again, the system rewards knowledge. A third challenge many newcomers face is the U.S. credit system. In America, your financial reputation is measured through credit history. Your credit score influences whether you qualify for loans, the interest rate you pay, and even housing approvals. For immigrants, the challenge is immediate. Financial history from other countries usually does not transfer to the U.S. system. Even responsible individuals begin with no domestic record. Without credit history, lenders classify borrowers as higher risk. This does not mean they distrust you personally, it simply means they lack data about your financial behavior. As a result, newcomers may face higher interest rates, larger deposits, or rejected applications. This process is known as risk-based pricing, and it is a standard practice in the financial industry. But here is where the story changes. Credit is not permanent. It can be built. Many immigrants begin with secured credit cards, which require a deposit and allow them to establish payment history. By keeping balances low and paying on time consistently, customers demonstrate reliability. Financial research shows that payment history and credit utilization are the most important factors influencing credit scores. Within 6 to 12 months of responsible behavior, many newcomers see improvement. Over time, financial opportunities expand. This transformation shows a powerful truth. The financial system responds to consistent behavior. It rewards discipline and long-term trust. Beyond overdraft fees and credit challenges, everyday banking charges also affect many newcomers. Some accounts charge monthly maintenance fees unless specific conditions are met. Others charge for using ATMs outside the bank's network, making foreign transactions, or receiving paper statements. These costs may appear small individually, but together they reduce savings quietly. This raises a simple but powerful question. How much money disappears each year simply because you never reviewed your account's fee structure? Customers who compare banks, choose low-cost accounts, and understand fee policies often keep more of their income. Many institutions waive fees when customers maintain minimum balances or set up direct deposit. The options exist, but they require awareness. Once you control these costs and begin building credit, your financial position changes dramatically. You gain access to lower interest rates, better financial products, and more favorable opportunities. Instead of paying penalties, you begin saving and planning for the future. At this stage, investing becomes possible. Many employers in the United States offer retirement plans, such as 401k accounts, sometimes with employer matching contributions. This means your employer adds money to your savings, effectively increasing your income. Other options, such as retirement accounts and low-cost index funds, allow your money to grow over time through compound returns. However, financial experts recommend building an emergency fund before investing heavily. Unexpected expenses can happen, and savings provide stability. Once this foundation exists, investing becomes a tool for long-term growth rather than short-term risk. This shift marks the difference between financial survival and financial progress. At first, money may leak through fees and misunderstandings. Later, the same money can grow through savings, investment, and informed decisions. The system itself does not change, but your relationship with it transforms. The truth is simple. The U.S. financial system is complex, but it is not impossible to understand. New immigrants are not disadvantaged because they lack ability, but because they are unfamiliar with the rules. Once those rules become clear, costs decrease, confidence increases, and financial control becomes possible. And here is the most important insight. The earlier you learn these rules, the faster you stop losing money and start building wealth. Financial knowledge is not just information, it is protection. If you want simple explanations that help you understand U.S. banking, compare money transfer costs, build credit faster, and grow wealth as a newcomer, make sure you like and subscribe. Every video breaks down complex financial systems into clear ideas so you can protect your money, avoid costly mistakes, and build real financial security in America.